All right. Welcome, everybody. Let's see, let people filter in. We are recording check. It is Wednesday, September the 3rd. That's crazy. Can't believe it's Wednesday the 3rd. Let's see. Give folks a chance to filter in. And we'll get rolling here in just a minute. Welcome, Yvonne. Put a chat. Let me know in the chat if we should have enabled the chat. Can you hear me? Can you see me? I see Yvonne and Matthew and Mateo. Welcome, welcome. Put a chat, put a yes if you can hear me, and let me know where you're hailing in from. Like, let me know what's the weather like for you right now? I'm in downtown San Francisco, getting ready to go to a conference. So I'm in my hotel room running the webinar from here, wearing my dad tax shirt, and it is classic San Francisco weather, a little overcast. But let me know, can you hear me and does the chat work? If it does not work, put in the Q&A and let me know that. And we're going to get started here in just a moment. Give everybody a chance to get a filter in. Can't believe it's September 3rd. That's crazy. Where has the year gone? All right. Give me just a second here. Mateo's my right-hand man. Pop him a text real quick. Apologies if the chat is disabled. It should have been, dang it, looks like it was disabled. Should have been enabled from last time. So technology, when it works, is an amazing thing. So sorry the chat's not working again. Put in the Q&A. Yep, I see that. Thanks for letting me know. I'll keep the Q&A live, and that way I can see if you have any questions. So chat should have been enabled, but we'll try it again next time. Technology, when it works, is amazing, as I always say. Let me share my screen. I'm going to share my screen here. See if we can do that. I'm operating, like I said, from the hotel room and not my normal kind of circumstances setup, but we are going to make it happen. Let's see. Today we are going to be talking about S corporations and how S corporations can be a tax savings vehicle. So I'm going to go ahead and launch in and we're going to get rolling. So, welcome today. We're talking about S corporations as a tax savings vehicle. We're going to introduce what are S corporations, who should be an S corporation, uh, how to execute if you decide, hey, that's for me, and pitfalls to avoid. Just want to say today's presentation is educational. It's not legal or tax advice. Legal and tax advice is when you sit down with a professional, say, here's my stuff, here's my circumstances, and then we talk about your stuff. That's advice. Today is meant to be broad in scope and general in nature. Big thank you for being here. I know your time is incredibly valuable. So, who is this bald man on your screen, right? Who am I? Chris Middleton, husband, father, goofball, self proclaimed goofball. I love my dad jokes. Entrepreneur, been self employed since 2010, been in the tax world for almost 20 years. Been self-employed full-time business owner since 2006. I have an accounting degree. I'm an enrolled agent, tax professional, and I've really morphed into more of a strategist in the last 7, 8 years, working with clients. And I'm a co-founder of Make Taxes Fair. We are a proactive tax firm focused on tax strategy for entrepreneurs. And our name is our mission because we like to say friends don't let friends overpay the government. Very proud of that statement. We've trademarked it. It's our mission and our mantra and what we say we believe and live. Again, your time is incredibly valuable, and you're probably here today because you feel like, hey, I pay way too much in taxes, right? In fact, I love paying taxes, said no business owner ever. I've never encountered a business owner that was like, hey, love paying my tax bill. But at tax time, you feel like taxes, you feel like, this, like you barely survived 12 rounds in the boxing room with this dude, right? In entrepreneurship, I despise the term small business. There's nothing small about business and being in business. And entrepreneurship can feel like you're getting beat up daily, and taxes just add to that feeling. And why? Because the IRS has designed a system of confusion. This is a visual representation of the IRS roadmap, or the taxpayer roadmap. And I'm like, baloney, where's the GPS if that's the roadmap, right? How about a roadmap of confusion? And it's no wonder that the reaction of most business owners when you bring up the topic of taxes is this. They're like, they put their head in the sand. They're like, my CPA's got me. Every busy business owner says that. But the reality, the sad reality is this, no disrespect to the profession. I think we have a couple of CPAs and or accountants in the room here, but most CPAs are what I would call happy historians, right? They not by any fault of their own, they're putting the right numbers in the right boxes, but during the crunch of tax season, there's not much time to do any proactive planning. And so the results of most people's experience with their CPA is the reactive approach, where at tax time, again, their tax bill feels like a total knockout. And navigating that maze to avoid the total knockout at tax time is tricky, right? Many people, they ask their friends, hey, what are you doing to save money on taxes? That can get sketchy. Searching Google, that can get sketchy. You don't know if yeah, I've Googled stuff and I'm like, oh, this is from like 10 years ago. Why is this popping up? Or even asking your CPA and not getting any real results. But that changes today. We're going to dive into the topic of an S-corp and show you, how to implement properly. Today's tax strategy for S-corp, on average, we save our clients a little over 11 grand on average, sometimes more, sometimes less. And we're going to drop some really amazing knowledge. And I wish I had a magic wand that I could just wave and translate the knowledge into implementation. Sadly, I can't or I don't. But what we've done is we've worked very hard and created a workbook for you. It's not magic, but in a sense, it kind of is because it'll help save you time and help you implement the knowledge. So when you signed up for the workshop, the question is, did you snag our playbook? So there's an offer we made when you signed up for the workshop. The workshop is totally free, and at registration, we said, hey, if you'd like for $1, you can get the step-by-step workbook for this strategy. Plus, on top of that, a free trial to our VIP tax strategy community. I'm going to put the link. If you did not grab that, I am going to put the link in the chat. Let me find that real quick. I think the chat's disabled, but you should be able to see that link in the chat. That should be there for you to check out. So let me know if you could see that or Mateo, if you don't mind texting me and let me know if you see that in the chat. Uh, let's see if we can make that happen. All right. So in the chat, I just put that link so you could get the dollar for the workbook. I put it into the VIP community, but as part of that dollar, if you have not already joined our VIP community, if you've joined that, then no worries. So you've already got access to the playbook or the workbook. But in the VIP community, you'll find replays for other tax strategies workshops that we've done in the past. We're doing these weekly with those workbooks. And I know for a fact that some of you, because I've seen the registrations come through, that you didn't necessarily grab and I haven't seen you inside the community. So again, our mantra is friends don't let friends overpay the government. So the link is in the chat to grab that for $1. You get the workbook. You also get access to the VIP community, and we're launching an AI tax strategy agent coming live soon. that will you'll have access to as well as part of that free trial. So you can go to our tax strategy webinar when you would have clicked there to get the VIP on that landing page. And the VIP in the VIP community, the training is available both in the free and VIP community. So while you grab that, here's kind of a little bit of a screenshots or preview of some of the playbooks that we've dropped in the past. So those are there to help kind of guide you. We test drove this workbook for the Augusta rule that we created for the webinar last week. Actually gave that to some of our clients, and they were like, "This is great, super helpful content that help guide them through the Augusta rule strategy, as we will do today with the S-corp." So today's strategy fits into what we call the clear edge framework. And again, we're very proud of this. This is something that we've trademarked, our proprietary process. So when we examine your taxes, we do so through the lens of what we call the clear edge framework. So we're identifying the different pillars of the tax strategies, or pillars of tax strategy for your business. And not everybody, like I just got off a call this morning with somebody that we're dealing with a $90 million exit from their business. It's going to be split between, I think, four partners. Um, Massive capital gains. So we're talking about exit planning to actually, in their case, defer and avoid a significant chunk of those capital gains tax, right? So they're going to save in the neighborhood combined probably about 25 to 30 million dollars worth of taxes. Huge, massively huge. And they were looking at buying a jet. They're like, oh, well, if we buy the jet, we can depreciate it, but we don't need a jet. And so we were giving them some alternatives to that exit. But we're going to be talking about the legal structure and how that impacts your business. So, real question, nobody here probably has ever seen, uh, and there's a lot of really quality CPAs out there that do great work, but I feel like they lack a framework to view your world and your taxes through. So if you've gotten the workbook or jumped into that, or in our VIP community, so if you want to get into the VIP community, you can go to maketaxesfair.com/community, and that's where you'll get into the free community and then access to the VIP. So let's lock and load, pull up those workbooks if you got them, pull out all the distractions, silence your phone, and then let's get into the clear edge framework for the S corporation. So the S corp fits into the legal structure in the pillar of the clear edge framework. And the question is, what is an S corporation, and how does that save you money on taxes? So first things first, anybody that comes to you and says, "Hey, I want to be an S corporation," there actually is no such thing as an S corporation legally, right? If you go to an attorney and say, "I want to create an S corporation," they're going to say, "Cool. Do you want to create an LLC?" And by create, they mean the attorney is going to file the paperwork with the Secretary of State to actually create that legal structure or legal entity. Or they're going to say, "Hey, do you want to create a C corporation?" And you're going to say, "Well, but I wanted an S corporation. Why can't you create an S corporation?" Well, that's because there is no such thing as an S corporation legally. There's an LLC or a C corporation. You create one of the two, and then from there you make the what's called the S election, right? So that's where you tell the IRS, "Hey, I want to be taxed as this thing called an S corp or an S election that's made to be taxed as an S corp." So, just a pro tip, some states actually will restrict the entity type uh, based on your niche, and some niches are actually also restricted. So there are certain cases, like I know in California, if you're a contractor, the contractor state licensing board, they don't like LLCs. They want you to be a C corp. They want you to organize as a C corp and then make the S election. They'll allow you to do that. Some professions in Texas, same thing. They're like, "Hey, we don't want you to be an LLC. We want you to be a C corp." again, they will allow you to make the S election. So it's just be aware, and this is where the value of working with a professional. We have a really amazing legal team that we refer people to for their corporation formations. And they do a great job of kind of filtering that out and saying, oh, here's what you are. This is what you need to be as required by your state, right? So we've established there is no such thing as a S corporation legally. There's an LLC or C corp, but then the question is, well, okay, I have an LLC or a C corp. When should I make that S election? Well, that S election, uh, there can be a right and a wrong time to kind of make that. And once you make that, it's very hard to you can unelect, but it's very difficult to go back and make that election and not advisable. So what is the S election? Okay, you're speaking Greek, Chris. What do you mean by S election? What that means is you file a form, it's called the Form 2553 with the IRS, and you're asking the IRS to give you that S corporation tax treatment. Okay, so what is that tax treatment? Well, let me show you. I'm going to give you some examples to show you how an LLC, C Corp, and S Corp are all taxed. And this is important to know that these are federal taxes only. We're not factoring in state income tax, right? If you live in a state like Florida or Texas where there is no income tax, great. But some states have income tax and S corp or LLC or C corp taxes. So we're ignoring those for purposes of this. So to understand the benefits of an S corporation, we really have to understand how C corps and LLCs are taxed. So let's tackle C Corp first. Even though it's on the right-hand side, the OCD people of the world will probably, no, start on the left, move to the right. Sorry. So let's say you create a C corporation. Well, C corporations have double taxation. What does that mean? All right. So let's say you have $1 million in gross income. You have expenses of 850,000. And so your net profit is 150 grand. Keep the math pretty simple. Well, C corporation has a under current law, a flat tax of 21%. So that means on $150,000 of profit, you're going to pay 31,500 in uh, tax on the C corporation profits. Ouch. So that leaves you with $118,500 left. But I need money to pay my bills, right? So if I out of that 118 grand, a little over 118 grand, take money out and say, hey, I need money. I didn't take a W-2 for my corporation. I'm keeping the example really simple. I take a $100,000 dividend. Well, on my 1040, that $100,000 dividend, if that's the only income I have, if I'm single, keeping it very simple, I'm going to have a tax bill of a little over 13 grand, almost $14,000. So you're taxed twice, right? You're taxed once on that $150,000 in profit on a corporate flat tax, but then you're also taxed on the dividend that you take out of 100 grand. So your combined federal and state or federal bill would be about $45,000, right? And that's assuming that we left a little bit of money in the corporation. We didn't pull out all the profits because we needed to pay bills for the company moving forward, right? So C corporation has a tax of 45, a little over 45 grand on $100,000 that was taken out. So generally speaking, C corporations we don't like because of that. Now, does that mean that we never use a C corp? Absolutely not. There are some really powerful strategies that revolve around C corporations. We're helping some people right now with the qualified small business stock, the Section 1202. We got 3 clients in play on that because of the recent law changes around Section 1202 qualified small business stock, because they're planning to build their business and exit. Topic for a different time. But C corporations can be the right tool for the right circumstances. Today, for the purpose of our conversation, we're actually saying, hey, let's say no to drugs, say no to double taxation, right? Let's just keep it real. Whew. So C corporations, double taxation can be the right tool for the business, depending on where you're at in your business. But generally speaking, we're going to stay away from those today. All right. So What about LLCs? Well, when I say LLC, if you create an LLC, you're effectively taxed the same way as if you're a sole proprietor, same way as you're a partnership. So when I say LLC, I'm saying, hey, sole proprietor tax the same, partnerships tax the same. So this is the same structure across the board, right? So let's take this as an example. If we have an LLC, gross income of $1 million, cool. We have expenses, 850,000. Does this look familiar? Yep, we're keeping apples to apples for the comparison. So we have a net profit of 150 grand. Well, LLC at the federal level, partnerships, sole proprietors have zero zero federal tax on the entity, the business type itself, right? But on that $150,000 in profits, it's a flow through, meaning that those businesses flow over. I misspoke. Schedule C is already reported on the 1040, right? So there is tax on that. So let's show you what the profits on 150,000 it looks like on LLC. We have a self-employment tax, which is effectively Social Security and Medicare tax for those that are self-employed. 15.3%. So in this case would be 22,950 bucks. Ooh, almost 23 grand. On top of that, we would have our income tax. So self-employment tax, that Social Security and Medicare, is separate from our income tax. So we have ordinary income, which is your tax bracket. In this circumstance, 150,000 for a single person would be in the 24% tax bracket. So you'd have another 28,847 in tax. So total tax, if you're an LLC at 150,000 of net profit, is 50, almost $52,000. So that's around 34, a little over 34%. So LLCs, partnerships, sole proprietors all come with the price tag of the self-employment tax plus your regular income tax, right? So when we compare that to the C Corp, now keep in mind the C Corp only factored in taking out 100 grand, whereas the LLC partnership is saying the full 150,000. Whether you pull that out of the business or not, you're still taxed on that, right? So C Corps have the ability to say, hey, we're going to leave money in the business and not pull that out as dividend and get taxed on it, right? But no, thank you, right? The double taxation, self-employment tax, those are all pretty hefty bills, right? So that's why there's an attraction to the S election. So let me show you how that works, how the S corporation taxes work here. So same scenario, $1 million in income, we have $850,000 of expenses. However, here's where it's different. We're going to take a $50,000 W-2. Now, pause for just a moment. In no way, shape, or form am I advocating and telling you that 50,000 on 150,000 of profit is an appropriate salary, right? Don't ever say, well, Chris said 50 grand was one third of the income was okay for reasonable compensation. That's not what I'm saying. We're going to talk about reasonable comp in a minute. This is an illustration only. So let's say again, we take 50,000 out as a W-2, and then there's net profit of 100 grand. Well, with an S corporation, there's zero federal income tax on your S corp. So how is that taxed to you personally? Well, we have $100,000 in corporation profits. We have $50,000 in W-2 income. So let's say we took the 100 grand. We said, hey, we're going to take that $100,000 as a dividend or owner draw. You're taking a draw against the profits. That's what happens. The whether you take the money out of the S corp or not, that income, that $100,000 in profit is flowed over to your 1040. It's a flow through. So that income is included on your 1040. The W-2 that we paid to the owner, the $50,000, is also included on the 1040, right? So $150,000 total profit, 50,000, 100,000. This is very simplified, but you see we're paying income tax or we're reporting on your 1040 the full 150,000. And so all that goes over to your 1040, right? Let's see if I can, are my slides frozen? Nope. Come on, Chris. Let's see if we can make this happen. There we go. Sorry. Not sure what's going on with my slides here. All right. Um, so that $50,000 W-2, we have Social Security and Medicare taken out, right? So that's said 15.3%. So between employer and employee, we're paying 7,650 bucks in Social Security and Medicare. Okay. Then income tax gets added, your regular income tax, your $50,000 W-2 plus the 100,000 corp. So now we're in the 24% bracket still. So the income tax is 28,800 and change, right? So 36, a little over 36 grand total. So if we compare the tax hit between C corp, LLC, and S corp, clearly the S-corp comes in at the winner saying, hey, we're paying overall less in tax. And the primary driver of that is we don't pay the double taxation and we're paying significantly less in Social Security and Medicare tax, right? 8,600 bucks less than the C Corp and a little over 15 grand less on the LLC. So S Corp comes in for the win. Again, LLCs, partnerships, and sole proprietors all come with that price tag of the self-employment tax plus your regular income tax. And so S corporation is a winner because the distribution of those profits or those profits coming out from the S corp are exempt from the Social Security and Medicare tax. Oh, so at this juncture, I forgot to delete that part. So the workbook at this juncture we have um, coming out saying, okay, let's evaluate, should you be or can you be an S corp? So we kind of in the workbook, if you grab that in our VIP community, you can grab and say, okay, am I prohibited from becoming an S corp? How can I become an S corp? Is it the right time to become an S corp? So we kind of have some qualifying questions there. So the common question that comes up all the time is people are like, well, shucky darn, if I can avoid the Social Security and Medicare tax, why would I even pay a W-2, right? I'd like to introduce you to our little friend, Treasury Reg 1 Regulation 1.162-7B, right? And what that is that's where it defines reasonable compensation is the value of what would ordinarily be paid for like services by like enterprises under like circumstances. In plain English, you, as a business owner, wear many hats. You wear different hats in your business, right? And the IRS says, hey, for all those different hats that you're wearing, the IRS is saying, hey, you need to be paid a reasonable W-2 wage for those roles. So if you're wearing the hat of chief cook and bottle washer, you need to be paid accordingly for the roles that you fill in your business. Most business owners are what we would call owner operators, right? And so it's the reality is a lot of business owners are wearing those different hats. So in the workbook, we kind of pull out and say, hey, let's go an overview of the S Corp. Let's talk about compensation. What do you need to be paying yourself? We have some basic questions that will help guide you in that. We also offer at Make Texas Fair, we offer a compensation study that helps business owners really dial in and get granular. On average, we help people like I've had people paying themselves $300,000 of income, W-2, and we've been able to drop that down to like legitimately 110, 115,000, saving them substantial on the Social Security, which I think is capped at around 175-ish right now. I don't memorize these things. I look them up every year. But the Social Security stops at that threshold. Medicare continues on. There's no cap on Medicare. So bottom line is we help people save substantially when we are strategic about and intentional and thoughtful about how we approach the compensation and say, hey, are we paying a reasonable compensation? Most business owners just say, oh, I need this amount per month to pay my bills. So that's what I charge or charge my company for my time as a W-2. So today we've covered S corporations, overview, how they're taxed, why there's an incentive for people to say, hey, here's why I want to be an S corp. So then the question is, who should be an S corp, right? Are you legally allowed to be? Are there state restrictions? Are there industry restrictions? Is the S corporation election the optimal legal path for liability? I always people say, well, I want to be S corp so I can have legal protection. Cool. I'm not an attorney. I don't pretend to be one on TV, Zoom, the phone, anything like that. My understanding is, in certain states, S corporations can offer legal protections for the actions of others, but only if you've taken the precautions and said, hey, we don't do stupid things. Here's the things that we train on our people annually. Don't drink and drive on the job. Don't, we have anti-sexual harassment trainings, all those things. And if you are putting those protections and saying, hey, we train on these things and tell our people don't do these stupid things, then that adds that element of, or can add that element of protection. But will an S corp be an end all be all for liability? Don't know. That's where you need to say, what's keeping me awake at night? Like what keeps me up at night with my business that I could get sued for or have legal liability for, and then take those questions to an attorney. Um, who should be an S corporation? Your net profits, the tipping point for starting to think about becoming an S corp, and if it's going to legitimately save you money on taxes, is is around 70 to 80 grand. In my experience, if you're not netting over $100,000 in net profit from your business as an LLC or a sole proprietor, you're going to struggle, right? And the reason for that is you have to be able to afford reasonable compensation. So if you are netting 100 grand, the what is the reasonable compensation that we need to be paying you? It could be 60, 70, 80, $90,000. So, the compensation question comes into play, to say, hey, we need to be paying that W-2 wage and afford both the wages and the payroll taxes on that. You also need to be able to afford the corporate compliance. So again, W-2. I'm beating this like a dead horse right now because if I sound like a broken record, that's intentional. W-2 compensation for S corp owners is a big deal. That's becoming more and more relevant in IRS audits. They're looking at business owners saying, "Hey, are you paying a W-2 wage?" I had a guy he was an attorney, divorce attorney. Business was good. People were fighting, especially during COVID. Coming out of COVID, he's like, man, he was crushing it, making about $800,000 a year from his practice. Great, doing really great. Paying himself W-2 wage of like $36,000 a year. I was like, dude, in what reality can you hire a paralegal for that? Like that's not reasonable. You should be making substantially more. So we actually increased his W-2 compensation closer to like 250, 280 was in the range. That's what the report came out. So he didn't save as much on the payroll taxes, being an S corp, but um, bottom line is he then became compliant. So you have to be able to afford the corporate compliance in the sense that W-2 compensation, payroll taxes, a payroll service, because if you're running payroll, you need to have really a payroll service. Do not DIY that yourself. You need to be able to afford the tax filings for your S corp, and then legal corporate compliance. So these are all things that need to be considered and add to the costs of the business. You also need to be able to have the right cash flow to unlock. So S corp can be the doorway to unlocking administrative home office deduction, where if you do 20% or more of your administrative work from home, that can unlock a home office. The Augusta rule, certain fringe benefits, which we're going to have future webinars on that, where fringe benefits are phenomenal. There are certain things that are not allowed for S corps that are allowed for other entities, LLCs, C corps. Um, so you have to tread lightly with S corps on that, but it is doable. And then retirement planning tools. So you want to have the cash flow to be able to justify the strategies that you want to be able to use for the S corp. So in the workbook, if you have that, there's a section around, is an S corp a good fit for my business? Meaning, kind of evaluate, am I going to be able to take advantage of these things and meet the basic baseline requirements of the S corp? So we've covered what S corps are, who it's for. Now let's talk about how to execute. So if uh, the first step is legally setting up the corporation, right? Secretary of State, legal operation documents, your agreement, operating agreement, all of that. That's where I don't practice law without a license. I'm not an attorney, so we partner with an amazing firm that handles that for folks and gets that set up. So the legal function of setting up is, again, those Secretary of State and kind of getting your operating agreements, internal documents, getting everything set up. Then you set up with the IRS and the state. So you file the Form 2553 if the timing is right to do the S election, register with the licensing agents, contractor, state licensing board, Department of Real Estate, any agency that kind of governs you. Then you're going to want to register your corporation as a foreign corporation. I'm going to say there are folks out there that are like, oh, I formed my corporation in Wyoming. Cool. You live in Idaho. Okay. You're if you live, work in California, Idaho, a different state, you're also in more than likely going to need to register as a foreign corporation. Your domestic, your corporation was born in Wyoming, for example, but you're likely going to have requirements to register as a foreign corporation in the state that you live and operate your business from. There are folks that are like, hey, like California and New York are notorious for this. Wow, there's fees and everything, and dealing with California is a pain in the butt, or New York, or these high costs of doing business states. So I'm just going to form in Nevada or Wyoming and avoid the whole mess with my California and New York. I'm sorry, that doesn't work. That's bad advice, and they're going to nail you. So you really need to operate and be running your business. If you're doing business in a state, you really need to look at the nexus and determine, is there a requirement to register as a foreign corporation, and then deal with your state income taxes. That's the reality, right? There are other ways to mitigate those taxes, other strategies to help reduce that tax, but that is the right answer. Hate to say it, but there's a lot of people that don't like to work with us because, oh, it's not what I want to hear. I'm like, that's cool. We're here to tell you what you need to hear, not what you want to hear. Then you set up payroll. So establishing payroll. So there's state requirements. You want to get the payroll set up, outsource that to a company. You want to register your payroll with that state. If you have employees out of state working in a different state, you need to register. That's part of registering as a foreign corporation. I have companies that are operating out of Idaho, but they have employees in Tennessee and Texas, so they have to register and establish those in those states. You really want to establish that reasonable compensation. And that's something, if you're an S Corp owner, you should be every year setting up your looking at and saying, are we on track and paying the right compensation for the hats that we're wearing and the roles that we're filling? Other registrations, you're going to want to make sure that could be Department of Transportation, want to get your insurances up to date, your contracts and agreements, all of those things. In the workbook, we have a setting up my corporation kind of a checklist of, hey, factors and things to consider for making sure that your S corp is set up both correctly on the initial setup, but also on the back end for maintaining. So now we're going to talk about how to stay out of the hazard zones and hazards to your S corporation, hazmat symbol there. What are the hazards to your S corp health, right? Well, corporate compliance. It's very rare that I come across a business owner that is fully executing corporate compliance. There's external corporate compliance. That's easy. Secretary of State, they send you a notice every year saying, hey, we need your statement of information, or we need you to update who are the officers of the corporation, blah, blah, blah. Tax filings. Okay, cool. We got to do our annual tax filings. All right, cool. Licenses, got to update the licenses. Okay, cool. The external corporate compliance is easier because there are external forces often demanding something of you. What often is missing is the internal corporate compliance with corporate resolutions, corporate meeting minutes, all the internal corporate compliance that needs to be done. And there's a future webinar coming up about that. But the corporate compliance internally can actually lead to some significant tax saving strategies. Commingling, right? So if you're commingling your funds, piercing the corporate veil, if you're trying to achieve any liability, separation of personal versus business, if you're commingling assets, that's going to turn into uh, commingling and piercing that corporate veil. Uneven profit sharing. Corporate S corps have one class of stock. So if I'm a 50% owner, so what that means in this case is, let's say Dora the Explorer and Bob the Builder, they till I have kids, right? They have two separate businesses, two very different businesses, but then they go in on, they're like, hey, we could co-join our forces and create a business doing you name it, right? So let's say Dora has 75% of the business and Bob has 25% of the business. Well, both of them can get paid an equal W-2, even though Bob is only 25% owner, he still can get paid the same W-2 wage as Dora, right? So that's okay. You can also have unequal, but if there's $100,000 of profits to distribute, 75,000, 75% of that has to go to Dora, 25,000 has to go to Bob. If Bob says, "Hey, I want to take out more," then Dora's proportional amount needs to come out as well. So the profit sharing component, if you distribute, say if Bob got 30,000 and Dora got 70,000, now you've created more than one class of stock, and the IRS can say, "Hey, that's cool. You've violated the terms of what an S corp is. You've given a distribution in excess of somebody's ownership percentage." So uneven profit sharing can hammer and really kind of hinder a lot of people. And a lot I see this often where uh, folks come in and they've been distributing money and we've got unequal distributions. We're like, okay, we need to address this. Missed deadlines. So S corporations have a deadline for taxes of March 15th generally, or the next business day after the 15th if it's on a Saturday or Sunday, right? Or holiday. There's other deadlines by state that some states like the Texas have franchise taxes and different things that are due in May. So there's other deadlines that you just need to be aware of if you have an S corp for your state and where you're doing business, fully aware of all the deadlines that come along with an S corp. Record keeping goes back to the commingling thing, right? And keeping track of distributions. S corporations, if you're not tight on your finances, it's easy to screw up and run afoul of the rules that govern or are you're required to follow if you're an S corp. And then really that no W-2, that's a huge pitfall that a lot of business owners just don't get or understand or are aware of because again, most CPAs are no disrespect, but they're that happy historian that just report the information and aren't really helping their clients proactively dial in and say, "Hey, you're overpaying in W-2. Let's stop guessing at that. There's no rule of thumb like 1/3 of your profits is W-2 or 2/3 of your profit." There's no rules of thumb. It's really a lot more scientific than that. And most CPAs just don't do what we would call a compensation study to help you figure out what that is. So again, in the workbook, we have how to avoid the hazards, kind of beyond the setup and saying, what do you need to do to maintain and stay out of the hazard zones for your S Corp? So, S corporations can be a very powerful tool, really powerful tax savings tool if utilized correctly. We had a client recently, he saved a little over 13 grand by switching to an S corp. Just one strategy on his, I think we saved him north of 150 grand, and one strategy alone accounted for not quite 10% of the savings of overall savings that we got. And many people operate an S corp but are missing massive additional savings, right? Because they don't understand how an S corp saves money. I know the chat's disabled, but put in the Q&A, was this helpful? Uh, was this a valuable presentation to you today? Let me know if this was something of value to you. And the wild thing about this is uh, the tax strategies for an S corp. S corp is only legal structure, right? Your legal structure is only one of dozens of tax strategies available. And the IRS really doesn't want you, they don't teach you how to use the tax code to your advantage, right? They got the taxpayer roadmap. And again, most people are like, hey, my CPA's got me covered. But the reality is, again, they don't. Most CPAs are not proactively helping you to mitigate the taxes. So today, I hope we gave you some information to share that, flip that script and share a strategy. But the secret that shouldn't be a secret is, again, this is only one of dozens of tax strategies. And the missing element, I say, is you're stuck playing defense, right? You're stuck playing defense against the IRS and the greedy tax code only because no one has ever shown you how to play offense. So today we showed you a system in the Clear Edge, to show you how to pay less in taxes. And again, that workbook that we've created for this workshop is part of that. I'm going to kind of cut it short here in just a moment because I'm playing hooky from the conference and want to make sure I get there. But I wanted to show you all in the VIP tax strategy community. Um, see if we got any questions that have been thrown out in the Q&A. Link seems to be broken. Okay, I'll email folks after the fact for the $1. I'll email everybody that was on today, and we'll fix the. I thought I had fixed the chat, so sorry about that. Technology when it works, right? Done is better than perfect, and we're rolling forward. I did want to share with you briefly, so you can access the VIP community. We have our free tax strategy community, and you can access that through maketaxesfair.com/community. In the classroom section, we put the last trainings we did last week. We did Augusta rule. This week we did the S corp. So there's kind of a write up and some information, real world example, determining reasonable compensation, etc. Helpful information that's free to the planet. So we invite you to check those things out there. Fairly robust kind of guide. But in our VIP community, same place in the classroom section, same article, same information, but at the bottom we have a workbook that we created. This is not the pretty workbook that is um, of all dressed up and branded. Our branding team, graphics team is out of the office this week, and so was not able to get this done, but they do great work. So we have a playbook workbook there that you can access, and I will be putting the playback of this workshop in here as soon as that's available. But as you can see, we've got several other topics kind of on the docket, things that we're coming up and are going to be teaching on weekly because friends don't let friends overpay the government. And we invite you, our friends, to share this with a friend if this was valuable to you. Maketaxesfair.com/weekly hyphen tax hyphen strategy, I think. You should get an email after the fact saying, hey, here's where you find the workbook, here's where you find the replay. So check all these things out. Thank you for being here. I see some folks said the link works for you. So I will send out that email here by end of day with the link for where you can access the free trial to check out the workbook, to download that and check out our tax strategy community there. Ask questions, engage. We're here to help. So thank you everybody for attending. Had more people here this week than last week. That's exciting and grateful that you're here. We'll see you next week. I think next week we're going to be tackling the accountable plan is what's on the docket, and that ties into S corporations and C corporations and sometimes LLCs. And then we've got coming up in 2 weeks, we're going to do a breakdown of the One Big Beautiful Bill, recent tax law legislation that was signed into law on July the 4th of this year. So thank you all for being here. If you can't be good at it. And we'll see you all next week, if not sooner. Thanks so much. Bye for now.